Hello, my name is Marcus Rafael G. Bolinao. I'm a student of grade 11 and today I will be giving you a tutorial video on GAAP principles, specifically cash accrual objectivity principles. First, what is GAAP? GAAP stands for Generally Accepted Accounting Principles. It consists of accounting principles, standards, rules, and guidelines that companies follow to achieve consistency and comparability in their financial assets. However, there is no universal GAAP standard and the specifics vary from one geographic location or industry to another. So let's say I live in the United States of America. Let's say the GAAP principles in my state in America is different from the GAAP principles in, let's say, the United Kingdom. Although the differences are very slight tweaks only. Now, going on to our first concept, it is the cash basis. The cash basis is a method of recording accounting transactions for revenue and expenses only when the corresponding cash is received or payments are made. Thus, you record revenue only when a customer pays for a billed product or service, and you record a payable only when it is paid by the company. So let's say, for example, that you rendered service on account, or basically, you rendered service to a customer, but through a verbal agreement with you, they will pay you on another date. If you are following the cash basis of accounting, you will not record that transaction as revenue, because you will only record it as revenue when you receive the cash. This method is usually followed by low-level companies or very small businesses, and it is not recommended for bigger companies because it doesn't really present an accurate picture of the company's financial situation. Now, continuing on to our second GAAP principle, which is accrual. So accrual is defined as generally accepted accounting principles, or GAAP, require accrual accounting because it presents a more accurate picture of a company's financial condition. Revenue must be reported on the accounting period that it was earned, and expenses should be reported during the same accounting period it was incurred. So accrual is the exact opposite of the cash basis, where if using the same example, if you rendered service on account, you will already record it as revenue. And this is usually used by majority of the companies and businesses, usually the bigger ones. And on to our last principle, it is objectivity principle. It requires that the amount recorded in the accounts records should be based on solid evidence. The intent behind this principle is to keep the management and the accounting department of an entity from producing financial statements that are slanted by the opinions and biases of the company. So, what this means is that all of your transactions that you shall record as an accountant or bookkeeper should be based on solid evidence, and that solid evidence are source documents, examples of which are official receipts, sales invoice, bank deposit slips, cash deposit slips. And this is just done so that no company would produce untruthful financial statements which would cheat the system or make it look like their company is making a lot of profit when in reality it is not. And that is the end of my tutorial video. Hope you learned a lot. Thanks for watching.